What's up, everyone? Welcome back to Bullmind Academy, where we break down the stock market with clarity, strategy, and the mindset of a true bull. Today we're talking about a very important topic: how to invest in the stock market during December 2025. December is a powerful month for investors, historically full of opportunities, rotations, tax moves, and emotional market behavior. This video is education only, not financial advice, but it will help you think smarter and plan better. Let's jump in. December is one of the most misunderstood months in the entire stock market. People assume the year is basically over, but in reality, December can reset your entire investing strategy. There are patterns, traps, and opportunities that appear only at the end of the year, and in December 2025, these patterns are even more important. Let's break down exactly how smart investors navigate this month. December has a very unique market structure that repeats almost every year. Here are the three major forces at play. First, you have tax loss harvesting. This is when investors sell their losing stocks to lock in tax benefits for the year. This selling pressure creates a few things you need to watch for: sharp dips in certain stocks, temporary undervaluation in otherwise good companies, and a wave of false negativity in the market. Often, these dips are short-term buying opportunities for those who are paying attention. The second force is called window dressing. Big institutional funds want their end-of-year reports to look as good as possible. So what do? They buy the stocks that have been performing well all year, which can push those winners even higher into the close. The third force is simply low trading volume. With holidays, travel, and general end-of-year slowdowns, fewer people are trading. Low volume means prices can swing more dramatically on less news. Understanding these three forces, tax loss selling, window dressing, and low volume, is your key to making calmer and smarter decisions. So, what should you focus on in December 2025? This is not a month for wild gambling. It's a month for review, adjustment, and preparation for the year ahead. Here's what matters most. First, look for strength versus weakness. You want to identify stocks showing relative strength. Those are the stocks holding up well or even climbing while others are falling. This is a powerful signal. Second, focus on future catalysts. December is really about preparing for the next year. You should be looking for companies with strong earnings trends, big product pipelines coming up, growing market share, and rising demand for their services. These are the companies positioned to lead in 2026. And third, watch for sector rotation. December often gives us huge clues about which sectors will lead in the new year. Keep an eye out for early signs of money rotating into areas like technology and AI, energy, industrials, healthcare, or even consumer spending plays. Spotting this rotation early is a massive advantage for your 2026 positioning. Let's put this into a simple, practical framework you can use this month. First, revisit your portfolio allocation. Sit down and ask yourself, am I overweight in any one sector? Am I taking too much risk or maybe not enough? And most importantly, do I still believe in my long-term positions? December is the perfect time to rebalance your portfolio and get it aligned with your goals. Second, consider adding to your long-term winners. If you have high-conviction stocks or ETFs with solid long-term growth trends, December can be a great month to dollar-cost average into them. Remember, winners often continue winning. Third, identify undervalued opportunities. Because of all that tax loss selling we talked about, you might see really strong companies temporarily get pushed down. This is where disciplined investors shine. You can find quality on sale. Fourth, and this is crucial, build your watch list for 2026. December is when smart investors do their homework for January. There's something called the January effect, where stocks that break out in early January often rise for weeks. Your watch list now becomes your opportunity pipeline for next year. And finally, avoid emotional trading. The volatility in December can make prices look scarier or more exciting than they truly are. Stick to your plan. Avoid making impulse decisions based on a single day's price action. Okay, so what types of stocks should you be considering in December 2025? Again, this is purely educational, not a recommendation, but history shows us that certain types of stocks tend to perform well. First, strong large-cap tech companies. These businesses have consistent revenue and massive cash flow, and they often attract a lot of institutional buying in December as part of that window dressing trend. Second, leaders in AI, robotics, and automation. These sectors are fueled by constant innovation, and they often carry their momentum straight into the new year. Next, consider defensive stocks. In low-volume, volatile months, stable sectors like utilities, telecom, and healthcare tend to hold up much steadier than the rest of the market. They offer a bit of a safe haven. Fourth, look for high-conviction growth stocks. These are growth-oriented businesses with solid fundamentals that might be temporarily discounted because of tax loss selling. Finding these creates a great opportunity, but it does require patience. And finally, don't forget about ETF plays. If you're uncertain about picking individual stocks, December is a perfect time to add to broad ETFs. You could look at market-wide ETFs, tech ETFs, dividend ETFs, or specific sector ETFs. They give you balance and help reduce your risk during volatile seasons. Beyond the strategy, December really challenges your investor psychology. Your discipline matters more than your tactics. Here's the mindset of a smart investor in December. They tell themselves, I focus on long-term growth, not short-term noise. They think, I don't chase year-end hype. And they act on the belief. I use dips to accumulate quality companies, and I prepare today for next year's opportunities. If you can maintain a calm, long-term mindset, I guarantee you'll make better decisions than 90% of the market, which is driven by emotion. So let's wrap this up with your final strategy for December 2025. Here is your checklist. First, rebalance your portfolio. Second, add to your long-term winners. Third, identify those undervalued opportunities. Fourth, build your 2026 watch list. Fifth, stay consistent and disciplined. Sixth, avoid emotional trading. And finally, focus on the fundamentals of the business, not the daily price noise. December is not the finish line. It's the reset button for the year ahead. If you found this breakdown helpful, smash that like button. It really boosts the channel and helps more investors learn smarter strategies. Subscribe to BullMind Academy for weekly breakdowns on market trends, strategy, investor psychology, and long-term wealth building. And comment below, what's your investing plan for December 2025? Thanks for watching. Stay smart, stay focused, and as always, stay bullish. See you in the next video.